The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and welcome to this Danielcode webinar. My name is John Needham, and I will be your host for today. And thank you very much to Adrian and, of course, Toddy, who should be in Southern California, but he tells me he's now in Kansas. There you go. The world keeps changing, doesn't it? Well, and Yawn as well. Wonderful to have such enthusiastic people. So thank you. And Sue as well. Lovely. Bo Johnson. Lovely, Bo. Good to hear from you, my friend. All tutorial people. Wonderful. Okay, so let's see where we are. The damage from Trump. Boy. It's been some fun, hasn't it? But there are a couple of important things to talk about. So first of all, let me greet our normal residents who come to these webinars all the time. Thank you, Adrian, Anthony down in Sydney, Bo, of course, Dean, plenty of Peters, and Dennis. Hello, Dennis. Glad to have you with us, and welcome. George, of course, he's a regular. Another George, 3, 4, 5 of them. And Greg Palladini. That makes 6. Wonderful to have you. Yawn, of course. Mark's with us, and Mike, who's over in New Zealand. Milton, welcome, Milton. He's a real old stager with us, as is Nathan. Glad to have you. Norbert up in that really cold country in northern Canada. Welcome, welcome. Peter Mack, who's not a day trader, other Peters, many Peters, and Philip. Welcome, Philip, of course. Pietro, who's a gentleman of leisure who travels between Europe and the beautiful Pacific Islands. Scott, who's with us. Welcome, Scott. Glad to have you with us. And, of course, Sadaswar, who's a absolute whiz at time cycles, aren't you? My friend, he keeps me informed of everything. Stanamir, welcome, and Toddy, of course, a tutorial guy that we know. Glad to have you with us. So there's a whole lot happening, folks, isn't there? And today I want to give you a couple of different views to try and put everything in perspective. First of all, we're going to have a look at the damage from Trump, and there's no doubt that what he's done has damaged the markets, and I suspect there's a whole lot more to come. This asinine act of slapping massive tariffs on every country in the world, allies and friends as well as enemies, no one given any preferential treatment. And of course, let's add a few islands as well, rocks in the ocean that have no one but penguins living on them. And let's put them on a tariff, shall we? Let's add Norfolk Island, which is a part of Australia and has no export business at all, but let's put a tariff on them, shall we? Absolute ridiculous, the whole thing. But anyway, it's happened. There's been pretty significant market turmoil. But I hope for today you're going to see, let's not minimize the damage he's done. It's dreadful stuff, a wonderfully balanced market that we've had for so long. And now we've got a couple of big question marks hanging over a whole lot of Trump and his ideas, which seem to come quickly and go just as quickly, as we know. But let's also at the same time put this in perspective, because what you're actually seeing at the moment is a masterclass in market control. And the market control is done by Mr. Market. It's not suggesting that this is the PPE or others. This is just what markets do. And the exactitude and precision of financial markets is truly extraordinary. And I've said to you in the past, markets are trying to talk to you. They've always been trying to talk to you. They're trying to tell you what they're doing. And our difficulty has been that recently, or until recently, I should say, not so recently, in the last 10 or 12 years or more, we didn't have the language to understand what the markets were saying to us. And until we got the Danielcode, we didn't have that tool. We do now. And you'll see that if we look at these markets in terms of what's happened in the broad brush of the population out there, including all the financial experts, it's a disaster, it's turmoil, blah, blah, blah. In reality, that has happened, but the way the markets have dealt with it is so controlled, so accurate, and so precise that it should give you a totally different view on the meaning of life in markets. And let me show you what I mean. For all the drama, here we are. I brought back this heading. Folks, you that are with it for a long time, as most of you are with it for a very long time. Welcome, Stephen, just arrived. And Stanislaw. It's spelled Slawomir. I thought it was Stanislaw, but I may be wrong, but he's a long-time Danielcode member, great bloke, and huge on time cycles. I brought back this slide, which you haven't seen for a while. I had it up as pretty much a permanent addition to our webinars. And in it, I'm saying that markets are rational, orderly, and sometimes predictable. And if you've been watching the turmoil of what we've been going through for the last week or so, you would think that's not right, but it is. So I don't want to denigrate the damage that's been caused by these, the unpredictability of Mr. Trump, but I do want to praise the market for doing what markets always are: rational, orderly, and sometimes predictable. Now, in the process of this webinar, I'd like you to keep thinking about learning to trade the Danielcode time signals. Or these webinars that we do, people come and say, how can you make me a really good trader? Well, Danielcode time signals are so different. They're different to everything else in the market. And that's what these guys who I'll be introducing you to a few of them in a moment have been using when they're talking about 600% on margin with their paper trading, 800% on margin. And I can make you a super trader as well. So give me 20 minutes of your time and go to the website, www.thedanielcode.com, and watch one or more of these videos. They're all on the homepage. The first one, video one, is from Mark L., who is not with us today. He had another appointment. He's gone to Utah. And of course, as we always say, there's no party without Mark. But he's not with us today, so far as I know. Dean's just joined us. Welcome, Dean, and the other Greg, etc. He gave this interview with me for video number one. And as he says, it's John Needham and the Danielcode have changed my life. Have a look at that. Video two is from a young lady in Boulder, Colorado, whose name is Amy, very lovely lady. Never seen a financial or future chart in her life. Now a super trader, returning 4, 5, 6, 700% on margin in her paper trading. Videos 3 and 4 come from a young gentleman called Justin, who lives in the beautiful Hunter Valley of New South Wales, Australia, which is our Keenland, if you like. The grass is so green you could eat it yourself, and that's where the big thoroughbred studs are, with the wonderful horses they breed there. So, if you are interested in trading and you want to get started, I can get you started. I can make you a super trader in just 3 days. If that interests you, write to me, Jane Needham, at thedanielcode.com, and I'll be happy to show you how it happens. Okay, so let's have a look at this. As Frank says, this is just a correction. But what a correction. This is the S&P. Have a look at this. Here's your big drama bar that we just had, and this is a 24-day chart, so every bar is 24 days. It's a really long-term chart. Have a look where it's gone to. The retracement of the operating range, 50% of that is 48.33. The low is 48.30. Just 3 ticks variance. So what about all the drama? Well, there's the drama, but this is how the market coped with it. And they're two different things. The drama is bad news. The market's control and rationality is incredibly good news. And for those of you who still think markets are rational, you're with us at the Danielcode. If you think they're disorderly and that there's a panic about, you won't think that after today's webinar, which I'm going to share with you. Okay, so what we've had, to put it in perspective, is the start of a correction. How much more is to come? We'll find that as we go. But the issues, and there are many, one of the boiling issues behind all of this is the funding for Trump's agenda. And those of you who pay attention to the political process will know that he's made some massive, massive demands for his agenda. Now, pretty well all of the most recent presidents have been big spenders. I want to bet that Trump's going to outdo them all in what is supposed to be a time of worrying about the US national debt and cutting it because it's just going bananas. What's actually happening, and you'll find this hard to believe, there's a giant pretense going on in Congress, both in the House and in the Congress and in the Senate, that yes, we're going to make these massive, massive cuts. And the argument has been between, believe it or not, billions and trillions. Literally, the House wants trillions in cuts from the national debt. The Senate wants billions. I mean, it's just absurd, isn't it? You start talking about those numbers, they all become meaningless. But that's what it's been, an argument between billions and trillions. And the reality is they're not going to do any of it. Politicians exist to reward their followers, to legislate on issues that they will think the population will find attractive. And the business of politics requires spending a great deal of money. And as I just said to you, I believe that Trump is going to set all-time new records because Congress, which is supposed to be a system of checks and balance in the US political process, which has three equally powerful groups in the theory of it. One's the executive, that's the president and his henchmen. The other's legislative, that's the Senate and the House. And the third branch is judiciary, the courts. And Trump, as the executive, is really pushing the boundaries of presidential power. The legislative bodies, the House and Congress, House and Senate, the Congress, in fact, they've rolled over. They're like a dog on their back, scratch my belly. And the judiciary, they're out, and they may be bigger players than we think. So here's this issue of this massive, massive funding required. And just today, the House managed to get through a vote. They've got very small margins, the Republicans in the House and in the Senate, but they got up on their vote to adopt the Senate budget, which allows them to go on this path that they call reconciliation, which is anything but. It's a way of avoiding all of the checks and balances that are in the Constitution. But we'll get to that. And the big money is on making the Trump tax cuts permanent. He introduced massive tax cuts in his first term, and the legislature wants to make those permanent. They're going to add massive new tax cuts as well. The other great issue, as I've been talking about, is cutting, in my view, pretending to cut the US national debt, US Senate, and the baseline argument on tax as well. If you pay attention to the Senate's budget legislation for this term of Trump, they've adopted what's called a baseline argument. In other words, instead of the usual method of saying this is what the tax liabilities, what the liabilities on the budget are, and the available funds, they've said, let's assume that this current year is the base year. In other words, they wipe out all of that budget history of huge, massive national debt losses going up and up and up and up. So that's an issue. Real tariff issues are still outstanding on automobiles, steel, aluminium, and of course China is one of the biggest issues, as is Europe, and I think that's going to be a tougher nut than most people think it is. Ukraine, that seems to be on its way to some resolution. And the US dollar's movement and why it matters, something we're going to talk about today. And the big player, of course, never forget this, whatever else is happening in financial markets, US bonds are the king and the queen. What they decide makes and unmakes legislative leaders in a absolute snap your fingers. Here's Anthony Gates saying to me, paper trading does not count. Well, actually, it does, Anthony, because how else do you train people? And if you can do it in the past, you can do it in the future. And I know it's not the same market. No one pretends that it is. But the best way to hone your skills is large amounts of paper trading. In other words, you're back testing your strategy against what the markets have done in the past. And what they've done in the past, they'll do in the future. It's human nature. It's not going to change that much. So, in a brief side note, some of you will remember Liz Truss, who became the Prime Minister in UK and Britain after Boris Johnson. And she brought in some very radical, indeed revolutionary ideas on her budget, which caused the UK bond market to go into hysteria, and she was out in a matter of days. That was it. The bond markets rule, because what's tied to bond markets in terms of housing, finance, levels of interest, business bonds, not just government bonds, private company securities, etc., are so massive that it's the one thing that can't be ignored. So this chart here, as one of the key ingredients is emotion. If they are that good, go live something. Yeah, that's right. And of course, the best way, Anthony, of getting your emotions under control is trading day in, day out. The reality is that the more paper trading you do, folks, the better trader you're going to make. And I can give you 30 years of my experience on that. Okay, so here's the US dollar, which I haven't talked about much to you lately, but it's becoming important again now. And have a look where we are. You can see that we've got, this is a 24-day chart, so every bar here is 24 days. This is a really, really long-term chart. And you can see the succession of lows starting in June 23 that we've had two, and we're about to have the third hit on this rising trend line. And what the US dollar does is very, very important. It's the reserve currency. China and a group of other countries are trying to replace it. It's called the BRICS, B-R-I-C-S. But the US dollar is still the global currency. And you can see what it's done. It's had a pretty dramatic dive off lower today as it tracks its Danielcode numbers down. And I'm thinking of restoring this to our members' charts. We used to do it for many, many years, and then I stopped doing it because so many brokers in the US were saying they didn't even carry data for it because it's on the ICE exchange, not the CME, but most of the platforms are allowing you to trade the US dollar now. So we might bring back that members coverage. Okay, so this is gold today, folks. If you think the markets are only all bad news, have a look at this for good news. Here is gold making new all-time highs on a closing basis. But look how rational it's been. Look where it got to. Look how it's gone, ripped straight through all the resistance levels. Where did it close? Pretty much at 3192.8, close enough, exactly where the Danielcode numbers it would have to pay attention to. So gold rational, orderly, making new all-time highs on a closing basis. This is a market that's full of running and full of itself, and that's important because one of the things that's happening at this time is what's happening, this big issue with bonds. Now, this is a really old chart that I've shown you over the years. It starts way back in 1998, and this is US T-bonds on the 24-day chart, where every bar is made up of 24 trading days. And as you can see, it's all got very cluttered. I'm going to show you a clearer picture. This is my original chart, which is still running, and you can see it's now hitting a big 280 period time cycle. Very importantly, it's running that all the way back from July 2099. But let's blow that up so you can see it. This dotted red line that's giving it support at the moment, that is 6 Danielcode deviations from the mean. In other words, these are standard deviations, the normal mathematical sense of standard deviations, but instead of using 1, we're using 1.593, which is the second of the Danielcode time cycles, most important, a very dominant time cycle. And you can see way from this high back in March 2020, we've been talking about forecasting and trading this as it came down, and you can see how well it's found support at each of these variations of the Danielcode deviation. And it's now down to 6 standard deviations, or 6 Danielcode deviations from the mean, which is a huge, huge move. And it's kind of interesting that it's approaching those levels at which previously we've seen some bank failures and some panic. And that's exactly what happened this week, particularly in the 10-year bonds. Most important. The other thing that's kind of interesting as a side note is I've talked to you over the years many, many times how gold and the US dollar index are generally in an inverse relationship. That is, if gold goes up, the dollar goes down. If gold goes down, the US dollar tends to go up. And we've seen that for years and years and years. And last year that all came undone. And those of you who have read my articles, they're all under the articles tab at the Danielcode website, will remember that some years ago now, quite a few years, many years ago we might even say, I wrote a complete analysis of this relationship. And what came out of it was the notion that when this inverse relationship breaks down, as it has in the past, it always favors gold. In other words, that's the precursor to gold having a big move up. And that's exactly what's happened here. And you can see now how the US dollar index and gold appear to be back in their locked position of being in an inverse relationship. And that's one of the reasons why I think we might start covering members' charts again for the US dollar, because it is highly predictive of what gold is going to do. Interesting in this massive, massive move in gold today, almost nothing in silver. Kind of interesting, isn't it? Okay, so what do tariffs and trade, what do they mean for you, the trader? So look closely at the following chart. Look how at the height of the Trump drama, which really was Wednesday, wasn't it? Tuesday, if you like. Each futures market was reacting. Remember, markets find it very hard, in fact, almost impossible, to turn without target recognition. And by target recognition, we mean that when the high, the low, or the close of a daily bar find their designated Danielcode price targets with a high degree of accuracy. How much accuracy? We allow a variance of 0.01 variance from target, not 1%, 1/10 of 1%, and that's a pretty tight measurement. And these Danielcode members charts are updated as required twice a week, sometimes more often. But what's so interesting about it all is that in a period of turmoil like we've had, with tariffs on, tariffs off, anything else you can think of to make life exciting, These markets have gone on doing exactly what they always do, tracking their Danielcode numbers. And you would expect that would not be happening given the volatility in markets. But in fact, the more volatility, the more accurate it is. Have a look at this. What I've done here is I've taken out the market charts for futures as at Wednesday's close. So you can see these points where we've had our buy and sell signals and target recognition. And sometimes it's hard to recognize target recognition. This is a bit of a classic. This is gold, and the inside bar closed right on the blue line number, around 2988. That was its target recognition, because you can see the previous bar slid straight through it. And you're not going to get that turn without target recognition. So that's one of the amazing things about markets. Those of you who are trading Danielcode time cycles are not looking at this, but as an adjunct, it's actually irreplaceable. Good traders are aware what markets are doing, not only in time, but also in price. This was crude oil on Wednesday night. You had this big dive down, 1, 2, 3, 4 bars down, big run down to the bottom. Look where it turns. 55.23 is the blue line. Where did it turn? Handful of ticks away, that's it. So this market is behaving as a rational, orderly market. That's what markets do if you understand Danielcode. Here's, excuse me, the S&P. Even better, found the 5074 low perfectly at its low. Next day opened at a Danielcode number 5015.5, went straight down to the 4829 number, stopped as if it was shot, key reversal bar, put your buy order on the next day, you got filled, then you get the big blow up there on Wednesday. Just perfect market analysis. This is copper, and copper's got a big story to tell us, which I'm going to come to later on, because we often refer to copper as Dr. Copper, because it so much relates to the general health of markets. And when copper's doing well, all is good. When copper's not doing well, it's one of the early signals we get that the markets are not happy. And you can see this market hit its flip me sell, came running right down, and at the bottom, this is Monday, Tuesday, Wednesday, the 3 bars down the low. Monday closed almost exactly on the 41780 blue line. Tuesday, the low of that bar was at the 410 blue line, and Wednesday again closed just above the 4118.25 black line on the chart. In other words, almost perfect target recognition in the middle of what appeared to be great drama and excitement. Here's natural gas. It's not quite as accurate. It was perfect at its highs at 4257. At its lows, it gave a target recognition, was fighting to hold 3478 on Tuesday, and then big rally on Wednesday for it. Here is the Russell. I'm going to show you every single futures market. I don't want you to say that I pick and choose this stuff. I don't. I'm showing you all of them. This is the Russell. DC target recognition at the close is the first one I'm showing you. The next one also, the big bar. Again, target recognition at the close. Target recognition is valid at the bar, high, low, or the close. Those 2 bars both gave you target recognition at the close. The next bar, the little inside bar, it gave you target recognition at the low. And it's those target recognitions that you see there that allowed for the big rally that came on Wednesday. So all I'm trying to show you here is how markets are controlled by the Danielcode and how accurate they are. Here's soybeans, which had another huge day up today, but its target recognition at the 970 correct 2 number, that was Friday. and then Monday, key reversal bar, up, better bar Tuesday, big bar Wednesday, up again today. A lot of this has to do with soybeans being one of the issues involved in Trump's tariffs. And here's silver. Interesting. DC target recognition on Friday. Open right at that number on Monday. Not much on Tuesday. Wednesday's low. Perfect target recognition at 29.25. Didn't do a whole lot today, which is kind of interesting. Here's wheat, and you can see it's pretty much Peter Perfect. Target recognition, target recognition, target recognition, target recognition. And of course, the last target recognition, excuse me, on Wednesday is what allowed this market to dive down, electing its sell signal today. This is the big daddy. This is US T-bonds. And this is this issue of Trump's tariffs. End of the world coming with the tariffs. 40-something hours later, well, they're off. Forget about it. We're not doing it. Oh, we're going to give it a 90-day pause at the moment. That was caused exclusively by what bonds were doing. And this is the 30-year bond, which the 10-year bond pretty much mimics this, but at a lower price point. But it gives you exactly the same shape. Have a look at this. For you've got DC target recognition at the high, 2 bars down, target recognition at the close. Next bar opens at the 115 red line, dives down all the way down to its blue line, which is 111.19. Perfect, almost perfect target recognition at the low. Big, huge key reversal bar, and of course today, big day up, as was fairly obvious there. So this process of learning to trade, we are in the business of teaching you to trade. We are in the business of making super traders out of all of you. And if you'd like to trade, if you're interested in learning Danielcode trading, we have 2 entirely separate methodologies running. The first one is a one-on-one sessions with me, somewhere between 7, 8, as many as you need, 1 hour, 90-minute sessions with me as we go through everything there is to learn about trading futures and financial markets. Our newer basis is what we call Teach Yourself to Trade. It's a video series, so you can, it's at a much lower price point. You can buy that for each lesson as you go through. Do it in your own time, in your own home, anywhere you like. Very convenient for a lot of you and at a much lower price point. So this is the main Danielcode Masterclass tutorial. And you can see there we've got kindly some endorsements from Mark L., who most of you will know from hearing me talk about him and talk with him. And of course, our great friend Greg Palladini, who's a US wealth manager, very, very good master trader. And he's with us today as well. Welcome, Greg. Great to have you here. So if you want to go that route, please email me, jneedham@thedanielcode.com. I'll be happy to send you all of the details. This is the TTT, Teach Yourself to Trade video series. Basically, I sent you out a document with this for your invitation, but there's your 5 lessons in there. As I say, the price of these video series is less than half the full one-on-one Danielcode tutorials. And the new one that we've added there is lesson number 5, Beyond Masterclass. I've been talking to you about that lately quite a bit, and it's very, very interesting. It tells you when's the best time to trade, tells you when a consolidation of sorts is forming. And being able to identify consolidations or sideways moves with no, or where you'll get very few profitable closes, you'll have solved one of the great mysteries of trading, the dreaded trade that's going nowhere. We've all done them, we've all seen them, and for 35 years or more, I've wondered how we could forecast them, and we now can with this new course, Beyond Masterclass, which you can take one-on-one with me, or you can just get it from the Teach Yourself to Trade video series. If you do take it from the Teach Yourself to Trade video series, I suggest that you should also do a one-on-one with me personally. That's free, but there's just so much more to it than I put into the original recording that I made. So we're seeing more and more about it all the time, all the wonderful uses of it. But if you simply do nothing else but avoid half a dozen consolidations in the year, you makes a huge difference to your P&L, which of course is vital. So here's Frank's commentary, and you can see he said for this week, on Monday, he said, exciting week, we were warned for a move lower in a hurry, and that's what we got. Thursday, we start this time cycle cluster for a cycle low, and this could be the low for the sell-off or just a temporary low. We don't know overall yet. Watch the Danielcode retracement levels as we enter the cycles. He says, Frank's view is that there's not an end to the bull market. This is merely a correction in the bull market. My view is that I don't do the fourth seal anymore. Frank does it for us, so I'll adhere to what he's saying. Okay, have a look at this with copper. This is a big deal, this Dr. Copper. Over the years, copper's got this wonderful reputation that's a precursor of problems in the market. Have a look what's happened. You get this big run down from a TO3 and blue line sell signal. You get your target recognition 1, 2, 3 days in a row. Today was a nothing burger. And where does it go? It's certainly at a very depressed level considering where it has been. So it's certainly not optimistic about the health of the market. And to put that in another perspective, have a look at this. These are daily bars, but look at the size of this rundown in copper. It wasn't so apparent on the previous bar, was it? But you can see it's down threatening the lows of January and August 24, and in fact it's down below the levels of April 24. This is a serious move, folks, and you can see, as I'll show you in the next slide, how affected by the moon cycles are these charts. You can see that little black dot, that's a new moon, all the way back to October 24. You can see that new moon there was one trading day after the high. The next one was 2 trading days before the high. The next one was the day of the closing low in that whole correction. The next one was 1 day before the closing low of that correction. The next one didn't do a lot. It was 1, 2, 3 days before the closing low. The next one after that was 1 day from a little counter trend high. And you can see the latest one 2 days after the all-time high, the recent high, I should say, in copper. That was your new moon, and this thing's just tumbled out of bed. And something to think about, folks. 13th of April is the next apogee. And this is a market that loves turning on apogees and perigees. So just be aware of it. Something to think about. Okay, so this is what happened during the week with the 10-year and the 30-year bonds. Have a look at this. It briefly breached the 5%, the 30 years. The always important 10-year yield rose above 4.5% as yields marched incessantly higher from around 10 p.m. until just after midnight. This from a zero hedge, of course. And this is what spooked Trump and the government. The 10-year is so important because it sets all levels of funding. It sets the interest rates for housing loans. It sets the interest rates for corporate bonds, corporate loans. Massively important. And just like Liz Truss found out, you can play with almost anything in the market, but don't play with the bond market. It is sacrosanct. It is a law unto itself. And when it starts getting cranky, as it did here, heads are going to roll. And that's exactly why Trump and his mates were forced to back off straight away from those levels of tariffs that were upsetting the bond market. So always remember the bond market is king and queen. what it does, it makes kings and queens, and it can unmake them just as quickly, which it did this week. So, thinking in terms of what's actually happening in the greater US world, you've got the whole structure of US government. There's three branches: executive, Congress, and the judiciary. And theoretically, they have equal strength, equal weight, equal power, which may be true, but it moves around. There are times when the president's exercising power to see how far he can push the boundaries, which is exactly what's happening with Mr. Trump at the moment. There are times when the Congress will become dominant when it perceives it's doing the will of the people. And that's not a joke, it's sort of just sotto voce. And the third part of this whole running and ruling of government in America is the judiciary, which is the court system. And the ultimate court system, of course, is the Supreme Court. And there are 9 justices on that Supreme Court. You have one Chief Justice, that's Roberts, and then you have 8 associate justices. Trump, like all presidents, he's testing the power of the executive, see what he can get away with to some extent. And it's really been ruled by presidential fiat for the first 90 days of his presidency. We see these little notes with his signature on them that we're going to do this or we're going to do that. Sometimes both. First, he says that if there's to be a bombing attack on Iran, then Israel will lead the way. In the very next sentence, he says, not that we need leading, we do what we want. It's always like his shirts. They come and go. They're always immaculate and crisp. So that's what he's doing. He's testing the power of the executive in a way it's never been done before. He's much more aggressive, much more bolshy about it all. The Congress has been pretty much sidelined. They've got, the Republicans have got tiny little margins. I think they've only got a margin of 3 people in the House, and not much better in the Senate. And they're struggling to come up with a justification for Trump's huge budget demands. And as I've told you, they're cheating on that. For the Senate to claim that they're starting off the new budget as from a baseline, which was the previous year, total rubbish. But they've done it. The Congress is powerful and can do what it wants to do. But they're pretty much out of the equation. They're rolling over for Trump. And, understandably, regardless of your opinion of Trump, you have to give him massive credit for what he's done. He's come from being pilloried, sued, abused, had his company taken away from him, all by what's called warfare by law, which has been disgusting by the Democrats, but he survived. He survived all sorts of things. He's made the Republican Party his own. Remember, in his first term, Mitch McConnell, the leader of the Republicans in the Senate, got to the stage he wouldn't even talk to Trump. He was so disgusted with him. Now, he's got the Senate on side. He's got the House on side. He's remade the Republican Party to be totally dependent on him, which is why the legislative is giving him a fair bit of latitude. So what hasn't yet made itself apparent is what's the judiciary view on all of this. There's a massive number of lawsuits with folks who are unhappy with Trump's decisions to fire them, reduce the size of their department, etc., deport them. All that lots of litigation is going on. Pretty much in the lower courts, it's going to take time to all filter through on appeal to the Supreme Court. And what's generally believed is that the Supreme Court justices are indebted in some way to the president that appoints them. And there are 9 justices on the Supreme Court. You've got Roberts, who's the Chief Justice, and of the associates, 3 of them have been appointed by Obama or Biden, and they are very much Democrat Party type people. They're liberal people in their thinking and in their judicial rulings. The balance of them, take out Roberts, are those in the conservative mould, those appointed largely by Trump, who's appointed the last 3. Biden's appointed the last one, Ketanji Brown, but before that, Trump's appointed 3 during his first term. And it's generally believed that these justices are beholden to the president who appointed them. And that's not strictly true. It was never strictly true. These justices are people with a really good judicial record. They've largely come from other courts where they've distinguished themselves. And it's been thought that the Conservative bloc was thought to be 6 in total, with the 3 Trump appointees now. I don't think it is. Roberts, who's the Chief Justice, he has always been an occasional swing vote. But what's happened now is one of the newer appointees, Amy Coney Barrett, who Trump appointed, she's showing some variance from the party line. She's starting to look to me like she's a swing voter. And it's a swing voter when you've got 9, the division is 5-4, or the other way is 5-4. It's so important with those swing voters. The delightful Amy, who has a wonderful record of jurisprudence, is looking to me as if she is a potential swing voter, which is really, really interesting, because a lot of this stuff that's happening under the Trump administration is going to finish up in the Supreme Court one way or the other. So I call this Trump's new shirt. His shirts, I notice, are always immaculate. He has a new shirt every day, and perhaps more often than once a day, for all I know. But basically, those in favour of the White House seem to change as often as Trump's shirts. Peter Navarro was Trump's go-to man on tariffs. Now, Navarro was a senior advisor to Trump in his first administration, he's an economist of some note. He had a doctorate, a PhD from Harvard, and he has been largely the architect of this idea of tariffs at massive, massive levels on everyone, not just our enemies, but our friends as well. Let's whack Europe, let's whack UK, let's whack Australia, let's whack New Zealand, let's whack everyone. And that's what has been going on under Navarro. And then we start to see this little bit of a split going on in the Trump camp, with Musk, who's his number one go-to man, who I guess he put in $240 million odd to get Trump elected. He's entitled to a big say in the business. But he was very anti-Navarro. He said he was an idiot. And in fact, he said he called him Peter Retardo and claimed that Navarro was dumber than a sack of bricks. So it turned out that Musk, as in so many other occasions, appears to be right, that this level of tariffs that Navarro recommended and talked Trump into was not a great idea. It will be interesting to see what comes out of the end of it. But anyway, when things went bad with that policy and Trump was forced to retract it, and it's now sitting at a 90-day pause at the 10% tariffs, and I'm not sure what's happening on these automobile tariffs. massive for Europe, UK, and Japan, of course. But the US Treasurer, the new Treasurer, Scott Bessent, his name is, he's an ex-George Soros guy, so it's interesting, but he's made the jump to a level of acceptance with Trump. In fact, he's much favoured by Trump because he's the one who said, look, these tariffs are causing troubles in the bond market, and you've got stop pushing them, start talking more about deals and other things. Just let's back off this pressure in the bond market, which is exactly what they've done. And Scott Bessent, who was pretty well unheard of until January when he became Trump's nominee for Treasurer of the United States, he's the new clean shirt, and he's the one that was rolled out with the young spokesman lady to talk about the fact that Trump had now decided that these tariffs would be paused for 90 days. Speaking to reporters outside the White House on Wednesday, Bessent said the president had planned on the pullback all along, with an eye towards bringing countries to the bargaining table. What a lot of rubbish. But Trump later indicated the near panic in markets that had been building since last week factored into his decision to change course. The reality, folks, when you've got two different versions, trust the bond market. It's the premium. So watch the bond markets and also watch currencies. Don't forget that a whole lot of tariffs and other restraining mechanisms can be negated by currency manipulation, of which Japan and China, they're the world champions. And they can alleviate much of the effect of tariffs by adjusting their currency. So that's what has been happening, and we're seeing these massive range bars in Forex and currency futures. And my guess is that that's going to continue to happen for a while. So keep a close eye on that. If you're not looking at currency futures, you should be. If you're a Forex trader, you're enjoying some wonderful, massive bursts of volatility. And in particular, watch the 10-year bond. It's the most important price for funding because it pretty much determines mortgage prices, corporate bond issues, etc., all the big money. So watch for any signs that China or Japan, who are amongst the biggest holders of US bonds and treasuries, are selling. There was a rumor that Japan was selling US bonds while it was negotiating just on Thursday, this Wednesday, so yesterday of this week. I'm a day ahead of you. For those of you who wonder why I don't know the day of the week, it's actually Friday down under in Australia, while it's Thursday night in the States. So watch for that. There's going to be the first inklings of how this is all going to break out. And you can see with the size of these bars, look at the size of these bars in Forex. Extraordinary, isn't it? We had a buy signal for the Kiwi. And of course it's duly done that. It's roared up 2 days. Very nice. We also had a similar signal for the British pound. It made its low, big momentum day down, biggest bar down into 127.11 minus a few ticks. Count these signals. The TO3 buy signals are valid for 2 days, including the day of posting. The TO3, the blue line signals are valid for 3 days, including the day of posting. The TO3 plus signals, we expect them to be activated on the day the signal is posted. But all of these signals can come early. And we're always happy about that. If the signal comes early, that's fabulous, because if it comes late, it's no use to anyone. The move's over and you've lost it. So bear in mind, be prepared to count. You've got the signal on this big move down, which is going to be Monday, and you get your TO3 buy signal, then you get 2 inside bars. Inside bars are null or void. Simply carry forward the last valid signal you had. And the program will show it as active for 2 days, but when you get inside bars, it will last for longer, of course, because those inside bars are not counting in time for the program's trading. So be prepared to write down these signals. If you get an inside bar or a number of inside bars, simply carry forward the last valid signal you had. Here's the British pound USD, or the cable as it's called. Okay, so here is something I want to leave you with. This is the 6-day chart for oil, and I apologize to my clients who are subscribed to this, that for some reason it didn't get posted, but I've updated it today and I'll post it in the next couple of hours. Look at this. Now, this is a chart where every bar is created of 6 trading days. How could it possibly be accurate when every bar is 6 trading days? And depending on when your data starts, the end date of that 6-day period will be different for everybody who's got a different starting date for your data. So it couldn't possibly be accurate, could it? Logic tells you that. But have a look at reality. The high of the last bar in crude oil, 72.20, right at that black line, almost perfect. The low of this present move at 55.22, 10 tick variance. The real low is 55.12. 10 tick variance is like nothing. That's not even the width of a piece of hair. It's extraordinary. And this is the 6-day chart for the S&P. This massive big bar down, which ended, had a 7-tick variance, that's all, from the red line down there at 48.34. 7 ticks, nothing, not even the width of a human hair. Stopped there, perfectly, rallied up. Where'd it go to? Right to the Danielcode red line at 58.26. What's the difference between the high of that bar and the number? A handful of ticks, that's all. Extraordinary, isn't it? Here's the next one. This is UST bonds, which is pretty much the daddy of the accuracy stakes. You can see when I put this up before the bar had actually completed, I put them up usually on Sundays and on Wednesday night. The high was 0 variance against the 121.27. Then with another 3 or 4 days to run, it made a new high. Where's the new high? Well, the next blue line was at 122.7, and it's made its high there with a 2-tick variance, that's all. You would think it unbelievable, but they are absolutely amazing, these 6-day charts, in forecasting the extent of market movement and market ending. Okay, so thank you, folks, if you're still with us. If you haven't already had a free trial of the Danielcode, please help yourself. Go to www.thedanielcode.com. Just hit the register button. If you previously had a free trial, the computer will probably remember you and won't want to give you another free trial because it's mean. That's what happens with technology. They become mean. But nonetheless, call or contact Terry at support@thedanielcode.com, and he will sort that out for you. And yes, you'll be happy for you to have another free trial. So please help yourself. Finally, this is our disclaimer, folks. I know it looks like a whole lot of hoo-ha, and we seriously are required to show you this and to emphasize that it's very, very easy to lose your money in futures and forex markets if you don't know what you're doing. And as I say to my children when they used to worry about exams, I'd say trained or untrained. You either know it or you don't know it. If you know it, it's very easy to make a lot of money trading. If you don't know it, it's very easy to lose all your money trading and perhaps a bit more. So please make sure you are a competent and skilled trader before you risk real money. If you're interested in achieving that exalted state of being a competent and safe trader, let me know. Do your Danielcode course. That is the best way to become a safe and competent trader, and it has the bonus that you will be learning about the safest and most profitable method of trading that I've ever seen in the 35 years or so I've been in this business. Okay, that's me for today, folks. Anthony Gates has left. I must have insulted him, and I'm sorry for that. The rest of you, thank you for being with me. It's been a pleasure, and I do hope that you've been able to understand the different points I'm making. Yes, what Trump's done is immensely damaging to markets, but look at the amazing ability of markets to handle that, to continue with their exactitude, with their precision, where all their turns are coming, which is the basis of Danielcode trading. So that's me for the day. Ewan, thank you for your nice comments, my friend, and for you, and also to Adrian. So glad to have had you with us, and all of you. So I will say good evening to you folks, and I'll look forward to seeing you next week at our regular webinar. Goodbye for now.